So this is the third and final financial statement that I want you guys to learn, and that is cash flow statement. Now, cash flow statement is literally a report that captures and record all the cash, okay, in the company, the inflow and the outflow of the company. That means when you do business, right, your money come in from certain sources, and then you also spend money out, okay, on certain other purposes, right? So this report here go and record the ins and outs of your cash in a specific period for the company. Yeah. So like I said, the purposes of cash flow statement to assess, okay, your cash generation ability from your business. This is the most important. We want to know whether your business is it generating cash or not. Okay. Then it's also to know your ability to finance your own operation, meaning to say you have enough money to reinvest, okay, or even to sustain, okay, your own business. And of course, okay, to judge the quality of your business. Okay. So in cash flow statement, it may seem very, very daunting one. Okay, so let me go through, share with you Lululemon's one again, to let you see how it looks like. Okay, now, hold on, not this one, the Lululemon one. Here. Okay, this is Lululemon's, how to say, cash flow statement, right? It may seem quite scary, right? There's a lot of things, okay, but don't worry. Okay, I'll make things very, very simple for you guys. Now, this is how it looks like. So in cash flow statement, there are three metrics I want you guys to focus on. Number one, operating cash flow. Number two, investing cash flow. Okay. And then number three, financing cash flow. Okay. What is it? Let's get started. So operating cash flow for me is one of the most important one because this is where I take a look. I can see the cash generated or used, okay, by the business. Okay, so let's say, for example, in the bakery business again, when I do business, I receive cash from customer, $10,000. Then that cash, the same cash, I also need to record to pay out for my ingredients and wages. I pay 4,000. Okay, and I also need to use that same cash to pay out my rent and utilities. Okay, so everything here, 10,000, I minus and minus this one. Okay, my cash from operation in total is $4,000. Okay, this cash, this cash. Okay, then sometimes I need to record also the other purposes of the cash I'm using. And that is when investing cash flow comes in. So this is where I record the cash used for investing in assets or even, okay, the cash that I receive, okay, from my investments. Okay, let's say, for example, okay, so in the company, all right, I go and sell off my old oven. All right, so I got 5,000. And then, okay, I also purchased, okay, a new baking equipment because I'm investing in my business further. I need to spend 5,000. So in short, okay, I receive 500. Okay, I need to, buy a new baking equipment investment. And that's why it's a negative 4,005. Generally, investing cash flow is always negative one. Okay, because we are pouring out money, right? We're investing in our own business. So it's negative. Okay, now, then the next thing we need to take a look at is financing cash flow. This is where the cash is used for financing purposes. Okay, like for example, such as loans. Maybe money come in from where? It comes from taking loan from a bank. Then I record it there. Let's say, for example here, okay, I'm a bakery business. A loan received for expansion is 8,000. So in my financing cash flow there's 8,000. Okay, then every single month or whatever, I will need to repay back the loan, right? It concerns financing, right? So I will also record repayment of the portion of the loan, 2,000. So at the end, my financing cash flow, there is a positive 6,000 there. All right. So this is the cash flow statement that, okay, you guys need to know. Now, let's go through the Lululemon's one again, okay, and go through it, okay, and see, apply it. Now, all of this here seems very scary, right? Actually, it's very, very simple when you know how to, remove what not to look at and only focus on what you need to know. So like I said, the first thing is we need to know cash from operation. So cash from operation in your mind, you know already. I want to know, okay, I want to look at the cash from operation. I want to know how much cash at the end of the day, okay, did you generate from your business. So I just need to take a look here. Cash flow from operating activities. I just need to go down there. Okay, go down there. Okay, cash flow from operating activities. I need to go down here. Net cash provided by operating activities. 2.29 billion. That's all I need to know. Like I said, I'm an investor. Tell me how much cash you generated from your business. Oh, I just know, you generated 2.29 billion. Okay, that's what I need to know. Do we need to know all of this, what happened ins and out of the cashier? To be honest, not really. Not really. Okay, because we are not accountants and we are not even the management inside there. Okay, we all need to know is to I'm an investor. I want to know how much cash to generate from the business. I just need to go down here. Okay, now, so the next one, of course, you want to find, okay, from the investing, net cash from use in investing activities, this amount here. This above here, don't need to know. Okay. Then cash from financing activity. Okay, we're going to go down here. Okay, how much is the financing activity? Money outflow around 500, around 500, 500 million. Okay, net cash used in investing activities around 600 million. So not bad lah. Okay, the cash I generated, okay, from my operating activities around 2.2 billion. My investing outflow 600 million. My net cash, okay, financing activities, outflow around 500 million. So no issue. Okay, no issue. All right, so this is how you go and interpret lah. Okay, now, so what you need to focus on, in the cash flow statement is only two things for us. And that is what has been guiding us to see whether a company, okay, is a good company, okay, to invest or not. First is the operating cash flow. Okay, why? Because like I said, it's the most important metric. I want to see the business generating cash. Right? I want to see them generating cash. Then not only that, I want to know after they minus their capex, and that is their free cash flow. Okay, let me repeat in case some of you don't know what is free cash flow. Free cash flow is when you take operating cash flow minus their capital expenditure. Okay, and what is capital expenditure? Capital expenditure is all the necessary expenses needed to maintain the business or grow the business. And this is what we call capex. Okay, and after you minus it, whatever that's left is free cash flow. And I want to see free cash flow. If there's free cash flow, I'm okay with it already. Okay, so let's go through it. Okay, let's go through the Lululemon one. Okay, let's go through here. Okay, Lululemon here. Okay, now, so this is how we know. Okay, let's say the cash from operating activities here. Okay, here 2.29 billion. We all know that already. So where is the capex? Now, a lot of annual reports, they don't write their capex for you. Okay, you just need to know what is capex. It's here. Purchase of property and equipment. Like I said, okay, it's investment, okay, for you to maintain or grow the business. So for Lululemon's case, they need to perhaps buy property or other equipments, okay, to grow the business. They need to grow a shop, right? For example, this is their capex. So in short, your free cash flow is to take 2.2 billion here minus 600 million. So there is still actually 1 point something billion of free cash flow. So that means this company is cash flow positive, very, very strong. Okay, now why free cash flow for us here is very, very important. Yeah, because the moment we as investor, we see a company has a lot of free cash flow, right? Then we can rest assured, okay, that the company, let's say free cash flow keep on growing one, right? Okay, then we can rest assured the company is doing something right. And the company right now and the management, they can do a lot of things. That's why it's called free cash flow. That means I can do a lot of things. Either I can buy back shares, or I want to give dividends, I want to continue to reinvest in the business to grow bigger and stuff. Okay, we do not need to know the nitty-gritty things inside there. As long as we know there's a lot of cash we generate from the business, and however you minus everything, there's still a lot of free cash flow, then good for us already. Okay, so it sounds very, very simple, right? In kind of investing, and that's the purpose of this video. Okay, we make things very complicated, and we help you to focus on the right things to make the easy decision. Okay, now on the next video here, I will put everything into practice. So on the next video, if you want to see how, okay, we analyze it, okay, on the financial statement, whether the company is good or not, okay, this next video, okay, is the one you don't want to miss out. Yeah, so see you in the next one.